We saw a quite significant recovery in crude oil prices over the course of June. Prices recovered from that 6-month low that we saw at the start of last month when OPEC Plus announced that they would unwind some of those voluntary cuts starting in the fourth quarter. But as the alliance came back and said, well, we'll only do so depending on the market circumstances. And then we did see supply fall short in June, and oil inventories declining after 4 months of builds. So even as we say that we're seeing a clear slowdown in oil demand growth, even so prices did recover as the market is expected to be tighter in the third quarter. We are expecting stock draws to continue into the third quarter, and with increased or heightened geopolitical tensions in the Middle East, it's what's keeping the market on its toes at the moment.
I want to focus on the geopolitical tensions in just a moment. But before we get there, I would like to understand, if you could add a little bit more color in terms of what you're seeing out of China. Some economists suggesting that that turnaround has not really panned out, but perhaps we could see that in a couple of months' time. Just explain to us what are the economic dynamics in China at this stage and how those are fueling potential changes in the oil market as well.
Yes, thank you. No, so obviously, both in April and June, we saw Chinese oil demand contract year on year, and this is a very significant change from what we have been seeing recently. In the first quarter, Chinese oil demand grew by more than 700,000 barrels a day year on year, and in 2023, it was 1.5 million barrels a day. So there's a clear slowdown, but we have to take into account the baseline effects, because in 2023, China came out of those lockdowns and demand increased very sharply in the second quarter. So there's a baseline effect. But even so, manufacturing, so demand for industrial fuels and petrochemical feedstocks did decline in the second quarter. There's concerns about the housing market and constructions in particular. So that's something that we're watching very closely. Even so, even with the slowdown, Chinese oil demand growth is expected to grow by 400,000 barrels a day this year. That is about 40% of the global gain. So China remains an important player of the market and in terms of oil demand, but the growth is definitely slowing from what we have been seeing over the past few years.
Now, this week alone, we've heard from at least 2 EV makers saying that they are seeing low demand, and as a result of that, they're scaling back some of their EV production and future plans on that front. So ultimately, what I would like to understand really is, how are you seeing the impact of these comments from EV makers on the demand for more oil?
We're definitely seeing still very, very strong sales. This year, one in 5 cars sold globally is an EV. And the strongest growth that we're seeing in EV sales is definitely in China, where you have a very, very strong surge in EV sales. Sales continue at high levels in Europe and in the United States as well, even though we do see the headlines that the pace of growth is slowing, but the sales are still growing nevertheless. And this is what's feeding into our view that gasoline demand will slow, growth will slow and eventually peak in the coming years. And that's something that we're already seeing in the market today. Global gasoline demand is still growing at a lot lesser speed than the number of cars on the road. So there's definitely an impact from the EV sales and better efficiency in the internal combustion engines.